Good morning, all of you. I requesting Chairman Sir Rinkesh Shah and the Direct Tax and International Tax Committee Chairman CA Jitendra Chaudhary to take the faculties on the dais. CA Vyom Sharma. I request all of you, please stand up for the ICAI motto.
य एष सुप्तेषु जागृति य एष सुप्तेषु जागृति कामं 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 कामपुरुषो पुरुषो निर्विमाणः निर्विमाणः तदेव शुक्रं तद्ब्रह्मा तद्ब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः शतः सर्वे तदूनात्यति कश्चन एतद्वैता 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 एतद्वैता.
Now I request Chairman Sir Rinkesh Shah to address the gathering.
Good morning, friends. We are on the last day of the 12 days income tax series 2025. I'm very much happy. On the last day, schedule was for the 3 hours. And somebody asked in the morning, क्या तो 3 घंटे का session है तो आपने lunch क्यों नहीं रखा? Friends, frankly speaking, topic which we discussed with the Vyom sir, that was only for the 2 hours. But we kept for the 3 hours just for your benefit कि 25 hours CPE हो, 24 hours की series अच्छी नहीं लगती है, so 25 hours की वजह से मैंने रखा हुआ है. I am very much happy today to have faculty Vyom Sharma sir. Definitely Jay sir will give the introductions, but as far as I know him personally, you name the country for the transfer pricing, you name the work related to the transfer pricing, he is the expert. When me and Jitin bhai were discussing about this topic, first of all we thought, should we include the international taxation, transfer pricing and other stuff in this income tax series, or should we do it separately? So, ગુજરાતીમાં કહેવાય ને કે ટ્રાયલ લીધો કે ભાઈ વી શુડ ઇન્ક્લુડ ધીસ અને ધેન વી શુડ ટેક એ કોલ કે ભાઈ ઇન્ટરનેશનલ ટેક્સેશન્સ માટે આખું એક દિવસનું કોન્ફરન્સ કરવી જોઈએ, કેટલા લોકો પ્રેઝન્સ રહેશે. આઈ કમ્પ્લીટલી એગ્રી કે મોસ્ટ ઓફ ધ ચાર્ટર્ડ એકાઉન્ટન્ટ્સ આર dealing with the domestic income tax. However, days have gone that we should not rigid or we should not strict to our boundaries. We should cross the boundaries and we should get the opportunities. Frankly speaking, the transactions nowadays, the industries are entering into, or I can say global transactions, or the entities as a subsidiary or the closely related entities setting up overseas. Frankly speaking, if all the chartered accountants are starting the international taxation practice and the transfer pricing work, Vyom sir will admit that I think next 10 years the volume of the work is there, so people will be, highly occupied for this. So I urge all of you, if you are not doing this work, please start this work, have the great learning today, and feel free to connect Vyom sir, Jay sir, Jiten sir or me for any kind of help is required for the international taxation or the transfer pricing. Friends, not taking much of your time, it is the last day, but me, Jiten sir and the entire managing committee is highly obliged that you are coming in the morning. Again, I know out of 12 days at least 6 to 7 days we could not start on time because of the various permutations, combinations were there, and because of that we could not start on time. Apologies for the same. But I have heard from many participants that it's a morning time and it is very useful that you can reach to the office on time and you can complete your commitment. So I think in future if we are doing the same kind of experiment for the various learning tool, so definitely I seek your support for the same. One more announcement to be made, that yesterday I requested, and 3 days before also, 3 to 4 days before, when the 1st July was launched, it was clearly mentioned from me as well as endorsed by Jiten Bhai that this time we are not going to have the overcrowd for the 1st July. And I think Jiten Bhai, in the first time in the history that early bird discount hours were not, up to 12 o'clock yesterday, early bird discount were available, but we closed the registration at 10 o'clock. We got good response from all of you. So in advance, happy CA Day. If you are not joining because of the non-registrations for the evening cultural program, don't worry, something exciting also coming for the 1st July, because we are going to celebrate the whole day since morning to evening, starting from the walkathon in the morning. So today the detailed email will come for the whole day schedule. So I request, if you have already registered for the evening culture, then also registered for the whole day programs, various other programs. And if you miss the bus for the evening cultural, at least I request that you should join for the other programs. And very, very important, I am requesting again and again, today, Chief Commissioner of the, this GST, that is from the CST department, is coming at the branch for the outreach program, and along with him, other 3 commissioners as well as various additional commissioners and team of 200 GST officers are coming today at 4 o'clock. So if you are into the GST practice, I urge you, there is no charge. Dinner is also there. Please join with the outreach program today evening at 4 o'clock and take the maximum benefit, because we know very well we have to spend more time when we are going to the department for, any kind of matters to be discussed. Here the department is coming here and discussing the various matters with us. So we should take the maximum benefit of the same. Thank you. Thanks a lot.
Now I request Jatin Trivedi sir for address the gathering.
Good morning, most respected eminent speaker of the day, Vyom Sharma sir. Thank you so much, sir, for sparing time and for the fraternity and agreeing to please deliver a session on transfer pricing. Respected Chairman of Ahmedabad branch of WIC of ICAI, CA Rinkesh Shah sir, who has already been planning for future, the moment that today's date comes, what next has to be done. So we have already scheduled 2 programs in the coming month. I mean, it is on the verge of completion, and I think in a week's time, we will be also launching the same for the benefits of the members for direct text things. 2 things I wanted to inform. Yesterday, I met different members after the session. There were 2 different requests which had come. First was, sir, where are these PPTs available? We have not received any kind of mail. So I would just like to say that you can go to Ahmedabad branch mail ID, Ahmedabad branch website. There you will be able to have all the details, all the materials which are already uploaded by the admin team from our side for all the sessions which had concluded till last week. So probably 3-4 sessions are left. Remaining all sessions, all the material have already been uploaded, and the remaining thing will also be uploaded by the end of this week. I have been assured the same by the admin team. Second, there has been a question that, sir, we want to share something about the series, because, it's a series after the rules were announced for the first time. So the only purpose of keeping 3 hours, of course, was maybe sir would take a little more time because of the transfer pricing thing. Second thing was very simple, that all have been coming here from morning 8:30, 8:40, and we are there for 2 hours. Then if any member wants to express whatever they felt and wants to give any kind of feedback, we will be more than happy to listen to them. So there have been requests from a couple of members for the same. So definitely when seniors want to say something, we should all listen. So we will definitely take that in the right spirit and will be more than happy to understand. I have a flight to catch at 10:40 today. So after the inauguration, I'll be leaving. So sorry, won't be there till last, but we'll definitely be connecting you again. Thank you so much.
It is a privilege to introduce CA Vyom Sharma. CA Vyom Sharma is a partner at Talati and Talati and carry experience in the transfer pricing world, more than 1.5 a decade of experience he have. He is he is a chartered accountant by profession, and also he is a bachelor degree in the commerce. His main area of practice is transfer pricing, international tax, and the domestic tax advisory. His main area of practice is the transfer pricing controversies and the litigation strategy for the MSC, as well as he also advisory on the client on the global supply chain mechanism as per their commercial needs of the business. With that remarks, I request Chairman Rinkesh Shah, as well as Direct Tax and International Tax Committee Chairman Jiten Trivedi sir to facilitate the Vyom sir. Now I request CA Vyom Sharma to take the charge on this session. The floor is yours, sir.
Good morning. Thank you so much, Rinkesh bhai, Jai bhai, Nitin bhai, for such kind words and finding me fit for this session. Surprisingly, there are members in audience whom I have been learning from. And standing in front of them is little awkward for me, but then I'll try and do justice to the role that I've been given today. A warm welcome, and this is really impressive to see such a large audience for a session on transfer pricing. This shows your commitment towards learning and constantly upgrading yourself as far as transfer pricing knowledge is concerned. Why am I relevant for you? I've been doing transfer pricing for last 14 years now. I have been living, eating, drinking transfer pricing. That's all what I have been doing all my life. And why is this subject relevant today? Was it not relevant yesterday? Yes, it was. Why is it even more relevant? Or why do we see a lot of opportunities in this field is something where I would want to draw, everybody's attention. Broadly, if we categorize ourselves into two buckets, tax practitioners, for them, it is high time now that you start practicing in transfer pricing because it has that potential of doing wonders for your practice. And for those who are in charge of, ensuring compliances in their organizations and industry, extremely important to be mindful of changes that have taken, that has either intentionally, changed or, it has changed of its own. I mean, it's very difficult to judge that right now. But then there have been changes which can have impact that nobody would have imagined. If just by raise of hands we would want to have a quick check whether anybody really believes that anything has changed as far as transfer pricing is concerned while we are moving from the erstwhile act to the new act. Do you really believe that there is any change, or it's just renumbering of sections and just renumbering of rules and newer names to the forms? Yes or no? No response? That's the best response, I guess. But really, just do you believe that there are changes that we should be mindful of, or we should be focusing on, because those changes are really relevant. Do we believe that, or are we of the opinion, no, it's just the same item bottled in a newer showcase now? The form has changed. Brilliant. One response. Thank you, sir. Thank you so much. Anybody else? Okay. So this makes my life easier. When I chose this, subject as a career option, time and again I have been relating to the dialogue from Munna Bhai, कि भाई गांव में जाके इतिहास पढ़ाएंगे तो कि गांव को कहाँ आता है इतिहास, अपने को कहाँ आता है इतिहास, तो गांव को भी कहाँ आता है इतिहास. And I usually end up taking advantage of this situation. So most importantly, things have changed. I don't know for good or bad, but they have changed. One, and it's not just a structural change. Let me start with a very simple presentation on the current framework of transfer pricing, and I have tried to compare it with what's there in the newer version. This is just for your ready reference. Don't find, while we are going through this, don't start believing that there is nothing very important here. But just to make everybody's life easier and my life easy, I've just prepared this presentation. I'll be requesting to the team that we share it with everybody. So the efforts that I've taken, maybe it could be useful to all of you as well. I hope this is visible to everybody. Yes, no? Last balcony? Yeah. I don't know if this has a marker light or something or not. No? This is not helping anyway. So the core transfer pricing TP sections in the current act that we have are in section 92 to 92F. The corresponding section in the newer act is section 161 to 173. For country by country reporting, we have a separate section 286. The corresponding to that, we have section 511 in 2025. Then there are penalty sections. Penalty sections more or less have remained same, but a very important change is that the penalty for non-filing, earlier, it was in form of penalty, but now we have it, that in the form of a fee. And that goes to the benefit of department, because penalty is still at discretion, but fee is irrespective of, there is no discretion there per se. The relevant rules are 10A to 10THD. In the newer act, it is rule 77 to 110. Very importantly, accountants report 3CEB. That has undergone a significant change, and the new form that we have is form 48. Now there could be plenty of changes, believe me, but the most important ones, I tried to capture them here. We'll be discussing each one of them in detail, but I've just tried to summarize a few of them here which are like absolutely important. The first one being the definition of associated enterprise. Now, why is this important? Can anybody want to take a chance? Why is it important to understand the definition of associated enterprise? those are the transactions covered by TRP provisions. Wonderful. What worries me if I am covered under transfer pricing? Superb. So, while I'm conducting my business affairs, I really wouldn't want anybody to poke their nose or, come asking me, why am I doing, what am I doing? And if there is a transaction, if that falls within the ambit of transfer pricing, the authorities have powers to seek as much information as possible, and they would want to check whether, right from the first step, whether this was transaction in first place was required at all or not, and if yes, then has it been rightly priced or not. The message that I want to convey here is, it's not just only about compliances. कि transfer pricing applicable छे तो we'll have to comply and file the forms. That's an important part, equally important part, but the bigger challenge is you'll have to justify your pricing to somebody. I really don't like it when somebody comes and asks me questions around my business affairs. But then once within this definition, I'll have to respond to such queries. International transactions, something has changed. We will discuss that as well in detail. Very interestingly, we now have block TP assessment. Block TP assessment frankly means something little extra, but it's just for the sake of convenience that everybody has started using this terminology. So I'm sticking to it, not being very innovative here. And then there is something around the tolerance band that we always had in transfer pricing. The clarification regarding this plus and minus 3% band, in case wherein we just have one comparable transaction or one comparable price, and then safe harbors have been revamped completely, especially for the IT sector. This is an absolute interesting space. If you have clients who are in this business, IT business, or you are part of an organization that is into IT business, this is something which as consultants is a nightmare for me, because I'll be not left with many opportunities which otherwise earlier I had, because IT sector has been facing a lot of litigation from many years. So as consultants we are losing out on that opportunity, but for industry it's a game changer event. This is something which transfer pricing regulations earlier have never seen this kind of far impacting an amendment. APS, something has changed, and thankfully the core of transfer pricing, which is the arm's length price determination, that has not changed. That thankfully has remained same, and it was anyways in line with the global standards. So very little opportunity or scope anybody would have had in changing anything there. Another section by section mapping. Frankly, this is just for ease of everybody's understanding. You can always use this as a ready referencer for any of your transfer pricing engagements or any discussions or reading purpose. Same I have done for the rules as well. A very straight comparison, as I've done that exercise for the forms as well, most importantly, because at times we struggle in identifying the right forms and ensuring whether we are rightfully completing all the compliances or not. So I hope this is going to be a good reference point for all of you as far as the older and the newer transfer pricing regulations in India are concerned. I've summarized the penalty related sections also. And then we have penalties for non-filing or non-compliances in relation to CBCR. Under-reporting and misreporting also has been captured very well in this slide. The earlier section was 270A1. In the newer act, we have 439(1). For misreporting, we have 278. In the newer act, we have 439(10). So these are the key takeaways as far as the broader when we talk about the changes at from the 10th floor. We'll get into details shortly, but I just thought I'll put this across for everybody's benefit. I mean, I'm sure this is too early to ask, but any questions around right now? Includes? Yes, it does. Anybody else? Do you think this is going to be a useful material? Yes? Thank you. Okay, now we'll get into details of a few very important amendments, or I shouldn't call them amendments actually. The most important one that I would like to discuss is associated enterprises. Again, we don't know whether this was an intended change or it has just, occurred. Nobody really knows that, but then something has drastically changed, and let's try and understand, what are those changes. We just discussed that it's important to understand the scope of associated enterprise because that's your starting point. If the two parties that are dealing with each other have no relationship at all, then we are less worried around the TP compliances or ensuring the arm's length price of that transaction. While this was being drafted, the newer act, I've just tried to demonstrate, what has changed, or was it just, what earlier I was trying to say, whether the changes were intended or they just happened, we don't know. So from when we look at the 1961 Act, we have the definition of associate enterprise, which is in section 92A. Now 92A actually had, if anybody has got a chance to go through it, it had actually two parts to it. One was a very broader definition which has to deal with capital management and control, that if one enterprise is participating in either of these three items of another enterprise, on a very broad level they could be categorized as associated enterprises. But then we also had a longer list in the second portion which had actually quantified these three terminologies, capital management and control, and it was time and again argued whether both these sections or both these subsections are supposed to be read individually or they are to be read simultaneously. There was a huge, a lot of litigation around this. So earlier it was in two parts. When we had the original IT bill in Feb 25, the language change was only around, for starting the second part of the definition. It was around just a very simple change somebody had attempted. They had just written, without affecting the generality of subsection 1. Now, unfortunately, what happened is, the moment you say without affecting the generality, that somehow had started giving a hint that the two portions are not supposed to be read together. To do away with it, there were review committees and then response from ministry as well. Finally, after making all the changes, what we then have, is just a reprinting of what was already there, but in a different order. Now, this change of order, when you read it, apparently it looks like that nothing great has changed. But if you really try and understand each and every line of that, redrafted section, which is as good as a replica of the earlier one, but in a different order, it has resulted in something which we really don't know was intended, or it's just an outcome of too many discussions around this. And so far, when the earlier, if we talk about the earlier act, whether both the parts of the earlier section were supposed to be read together, thankfully, those cases had reached to the Supreme Court, and thankfully again, it was in the favor of the, this argument that both the portions should be read together. Now, what do we mean when I am saying these two sections? In the earlier act, the enterprises, if directly or indirectly or through intermediaries, are participating in the management, control or capital of another enterprise. This first portion of definition was there. It was followed by certain examples, which I have tried to summarize here. The subsection 2, which is the deeming provision, once the first part is, or the first limb of this section is applicable, then somebody really has to sit and see, which of these conditions are simultaneously met for two entities to be associated enterprises. So when we talk about management, control or capital, which is otherwise a very generic term, to give it some meaning, we had these thresholds there in place, which help to understand, by if these are the cases, in such cases we would want to claim that one entity is participating in management, control or capital of the other entity, which have, this simple listing is 26% of voting power, or if there is loan of more than 51% of the book value of total assets, guarantee of 10% of total borrowings. These are very much in the existing act, and time and again it has been, it was debated whether both needs to be read together, or we can just consider first portion separately and the second portion separately, the two subsections. Time and again it has been held by Supreme Court that both needs to be read together. Now, just for your reference, I have put this two rulings in this slide. One is Veed Gems, the other one is Page Industries. One is, from Gujarat and the other one is from Karnataka. In both these cases, time and again, it has been held that I see a lot of cameras. I'm sure these slides will reach to you. So just relax and take your time to absorb what I'm trying to say. You will very much be having access to these slides. So in both these cases, it was held by the high courts of two states that subsection 1 and subsection 2 needs to be read together, and department had tried to file SLP in both the cases, which were rejected by the Supreme Court. They had dismissed it. Now what is happening is, since in the newer act, they have tried and copied the same words, but they have disturbed the flow of these two subsections, and it is now all in one list. And that is the reason, that whatever so far had been agreed upon or, was the law of the land, because the Supreme Courts had held so, that two subsections need to be read together, that unfortunately is not the case anymore. Now what it really means for us, this changing of order and so then if you'll read it in the newer section, you'll find this kind of a list. There is clause A, which is in relation to participation. It starts with that first subsection of the earlier act, which is common persons in management, control and capital of both. Now instead of having a different subsection, they continued in the similar section that when can that be relevant is if somebody is holding more than 26% of voting power at any time during the year, or there is a common holding. And below it, then in as subsequent clauses, it continues the same thresholds we had earlier for different kind of a relationship. Sorry. Yes. Yes, you are absolutely right. In the earlier act, 1961, it was this at any time during the year was relevant for all the clauses. So you are absolutely right, that if during the year, for part of the year, one of the threshold has been met, say in this case 26% of shareholding, if you are A for part of the year, you are supposed to comply with transfer pricing regulations for the entire year, and you will have to demonstrate the arm's length nature of transaction for the entire year. It covers every kind of, whether it's a subsidiary or a common holding, it tries to cover everything around it. But then this any time during the year is very important discussion, otherwise also, because in the newer act, in few of the clauses, you will find any time during the year. There are clauses wherein you will not find any time during the year. If you have diluted and you are no more a related party, then for the subsequent year, you don't need to worry about transfer pricing. Yes. But then again, this rewriting has damaged this consistency also, that for all the clauses at any time during the year is not there. So we don't know, in some of the clauses you'll have to ensure that you are complying for the full year. For rest of the clauses where you don't have this any time during the year, I would want to take this argument that once I stop being an associated enterprise, I wouldn't want to comply with transfer pricing regulations. Yes. Sorry? You want? No, I'm all completely dependent on the IP. You take any of your franchises. That could be the simplest example, that I'm dependent completely either on somebody's IP or the know-how that they pass on to me. Franchises. So when transfer pricing, earlier section 92, since if I'm a franchisee holder and I'm completely dependent on the franchisee principle, there used to be a lot of argument whether transfer pricing should be applicable or not. But then the subsection 1, which talks about management, control and capital, that condition was not being met. So franchisee holders safely took this ground, that since there is no participation in either capital or management or control, we wouldn't want to be classified as associated enterprises of the principal franchisee giver. I'm just sorry, yeah, so exactly, jockey is a fantastic ruling that we already have, wherein this was attempted, that if you are, complete your technology, and for any technology that matter, any technology. So your question is bang on point, that suppose if I'm dependent on somebody's technology for my business, and it could be any technology. Franchise is just one example. And if it's a third party, do I really need to treat it as my associate enterprise? In the older act, since subsection 1 condition was not met, which is in relation to capital management and control, there we could strongly argue that we do not fall within the ambit of transfer pricing. But now onwards, since we don't have that subsection 1 and it's all just listed in one line, your scope of transfer pricing has expanded like anything. Think about all the franchises. Franchise is the simplest example that I am giving you. Think about all the franchises that are there in India. So a simple reshuffling of sections or clauses has a significant impact. And all that was settled law by now, thanks to the 2 rulings we saw earlier, it is all disturbed now. That can cover all your other cases as well. See, I'll tell you something. These are sections which you don't get to see in your day-to-day life experiences, because those will be, one could be that somebody has really attempted to demonstrate that we are not related parties. In those cases, I am dependent on you completely, but on paper we have tried to ensure that we are not related parties. Maybe those kind of arrangements can get captured here. But if you ask me what can be a good example of it, for a TPO to claim, it could be anything. And these, frankly, these clauses are not new clauses. These clauses have always been there. In earlier act also, these clauses were very much there. What is caused this damage or this uncertainty is the earlier arrangement of clause 1, which required a precondition that there has to be a participation of capital or management or control, and followed by any of these general clauses which are very easy to claim that there is an influence or there is a price determination assistance, or because these are very generic in nature. For anybody to claim that you are working as per the directions or price arrangements fixed by somebody else, it's a very easy to claim kind of an arrangement. But then capital or management or control are actually, I mean, they need substantial proof. So earlier the life was much easier, but now since this has changed, this order has changed, it's going to be really difficult to time and again defend yourself that we are not associated enterprises. Everybody, I just want to make sure, am I really able to convey the magnitude of the again, I don't want to use this word unintended, but if you really ask me, frankly, we are, if we are actually taking this stand that even without an evident participation in capital management or control, can any of this condition should lead to a relationship? In most of the developed countries, this control and management and all has always been kept open. You get my point? Rest of the world also has transfer pricing regulations in their domestic laws, right? So when you'll read those local regulations of those countries, in most of the developed countries also you'll find, they really haven't got into, like India did. Because India has always been a country where we need to objectify things, we need to give certain meaning to it. Otherwise, what we know is, endless litigation around things. In India, we all have these kind of clauses, but that's not the case across the globe. If you'll read OECD, you'll not find these kind of, specific instances wherein two entities can be associated enterprises. High chances somebody would want to claim that. Exactly. That's exactly the point. If you ask me, it has, across the world, it has been open. OECD, the clauses are open. If you'll read any of your bilateral treaties, again the clauses are open. But then it was India which was very specific that we don't want this kind of ambiguity. We would want to put some numbers to things. And that is how the best, whatever they could think, they had put those, they had quantified those things. But now we are again in, we have stepped back, like we have gone on the ground floor again, wherein things are now open.
Because the law was already settled by Supreme Court regarding this, that we have to read both the clauses together. Both the clauses operated together in the earlier act.
Exactly.
And now they want to club two clauses with the first clause.
Yes.
So how does this make sense? I mean,
nobody is able to figure that out. How is this going to make sense? Frankly.
So do
Because
you
they have-
expect any further clarification on this?
We can just wait and watch, nothing else. Is there anybody who has not been able to really understand, what am I trying to convey or what these questions are? I would want to take some time to, ensure that this message goes along with you, that A definition is now extremely open and very subjective. We'll see, what officers have to, how they deal with this in absence of any further clarity from CBDT. Please don't shy away. Please ask questions because this is absolutely important. Yes, sir. Domestic transactions, thankfully, you have those, sections very clear cut defined that if there is an inter-unit transaction between a tax holiday claiming unit or, those are very defined. So, you will not find situations wherein A definition will have any role to play. A definition has to play a role in international transactions only. Specified domestic transactions are clear-cut sections, and those are applicable only in cases wherein one of the other entity is claiming a lower tax than what you are paying. Either you are in that 115 BAB entity. So those are like really defined, and your participation, irrespective of that, you will fall back to the same section. It is only more to do with international taxation or international transactions wherein you need to be worried about this. Yes, sir. See, again, this common participation or common control, they have tried to cover everything around it. And frankly, that's not new. It has always been there.
But nowadays, what happens is that IT technocrats are, staying in US and they are opening the company in India along with the relatives and keeping some another one within the company, LLP or private limited. Now, how to look, but in that context, understand.
So that is what I'm telling you. The way we were reading it earlier, we will have to read it in the same fashion. The clauses haven't changed. It's just that the order has changed. So if earlier you were, and again, as far as these clauses are concerned, everybody has been very subjective around it because there is no clear cut quantification of it. Now, if for somebody, I would want to claim that, I am controlling you, but that does not actually imply that there is a control. That control has to be demonstrated. So earlier the life was pretty easy. 3 terms, they were put in subsection 1, and somehow, how do we get to know whether there is capital or management and control? These were the items that used to come to our rescue. It's in clause A. Yes.
So what about the threshold readings for the other clauses?
That's, there is again that, again you don't know, because for few clauses I would want to say that, any time during the year is relevant. And for rest of the clauses, it's not mentioned there. Then I would want to agree, believe that it's not intended there.
I believe it was there in the earlier act.
In the earlier act, it at any time during the year was applicable to all the clauses.
Correct.
Blanket, it was applicable.
Correct. And now they have removed this.
They have retained in some and then they have removed it from some.
So it is open-ended on us, or we take the support from the earlier act to determine these thresholds?
See, now frankly, I'm not somebody who can confidently say this, how easily we can be counting on the, earlier act. Because the act which says, that the earlier act is no more relevant and it's repealed, now onwards we'll be having this new act. So we'll have to, read the new act. Time and again we have been discussing, that every professional will have to be expert of both the acts now. I cannot be just an income tax expert, I'll have to be income tax 96(1) expert, simultaneously income tax 2025 expert as well. Things like this, it leaves you in a very strange spot that how do I read these sections now, and what happens to the the law settled by the Supreme Court? How about that now? We don't know. Any queries, questions around this? No? I'm hoping that the message is clear, that earlier the relationship definition was a little more objective, but now onwards it's extremely subjective. And that used to be the case in our olden days, good olden days, when even prior to introduction of section 92 in the 1961 Act. We are back to the same times now, wherein we don't know, we don't have absolute certainty who can be classified as my associated enterprise, and which entity I can claim that it's not my associated enterprise. Any questions around it? Great. Okay. Now another interesting thing that has happened is, while we were reading section 92A1, the first limb, in that we had two kind of arrangements in the 1961 Act. The first one is wherein 92A1A, it used to say, if I am directly controlling, directly, indirectly, or through one or more intermediaries, if I am controlling another enterprise. And 92A1B used to say, if I am that common entity which is controlling two other entities, so those two other entities are also associated enterprise. So 92A1A is bilateral arrangement, wherein 92A1B is tri-party arrangement. So if I am a common holding for two entities, then those two entities are also associated enterprises. Now what has happened is, while drafting 162(1) in the new Act, they started with yeah. Picture. So they started with the same language which is there in 92A1A, which participates directly or indirectly or through one or more intermediaries in the management or control or capital of the other enterprise. If they would have stopped there, then we could have confidently said that we do have corresponding section of 92A1A in the new Act. But then they really didn't stop there. After enterprise, they started saying in the following manner. Now the moment it's said in the following manner, then I will have to read what has been given below that to understand what this will, this kind of definition will mean to me. In the following manner, they have put 3 points. The first one is one or more enterprise who participate. Now, this is corresponding to 92A1B. Okay. If you read this language, it's exactly the same language. But then, unfortunately, what has happened, there is no corresponding subsection or clause to 92A1A in the new Act. Because they have written this rightfully till here, but then instead of putting a full stop here, they continued it and it said it in the following manner. And when we go and read the following manner, this bilateral arrangement which was covered here is not there in this new Act. Only the tri-party arrangement that is there in the earlier Act, only that tri-party arrangement has been covered rightfully. So what has happened, that although this generic clause which says participation in capital control and management, that ambiguity is there for the tri-party arrangement in the new Act. For the bilateral arrangement of this general clause, we don't have anything corresponding to that particular clause in the new Act. Again, I'm making it confusing, but I'm able to explain this. If you'll ask me why has this happened, I don't know. Yeah. Yeah, it's looked like, it has been taken away from, but then was it really intended? See, this is very silly that I want to make it broader, the definition, but I want to make it broader for one of the arrangement out of the 2 arrangements that were earlier there. The bilateral arrangement that was earlier there, the general clause, and then there was a tri-party arrangement. Wherein in the new Act, I am just bringing one of the arrangement which is tri-party arrangement. I am leaving the bilateral arrangement there and there itself. I don't know whether if this really intended. Sir, I don't know whether the new Act, we tell it an amendment is a question mark. See, this was never supposed to be amended. It was supposed to be carried forward as it is in a simpler language. If we say that are we amending things, then we are, that again is another point of discussion. So right now it just appears that they tried to copy the things as it is, but then in this, making it easy to read, in that attempt, unfortunately the entire meaning has changed. either we are lucky and we get some clarification before our first filing. And frankly, whatever we are discussing, this is not a પેલું કહેવાય ને જબરદસ્તી નથી કરી રહ્યા કે ના ના મારે કંઈક કાઢી જ બતાવવું છે કે સમથિંગ હેઝ ચેન્જ. It's an easy language, easy to read language, and whatever we are trying to interpret, it's making sense. Now, if you ask me things have changed, answer to that is yes. Was it intended? I don't know. કેમ કે બધું settled હતું. Things were pretty much settled around associated enterprise. But then suddenly by making this reshuffling, things have again gone for a toss. Absolutely. મારી લાઈફ તો હજી બી ઇઝી છે કે એક સેક્શન 92 છે જે અધરવાઇઝ ઇન્કમ ટેક્સ પ્રેક્ટિસ કરે છે. આઈ એમ શ્યોર દેર આર મારું તો ગણી નાખાના એક્ટમાંથી એક સેક્શન 92 છે. But if you ask me, what would I do as an advisor? I would want to advise my clients કે ભાઈ અત્યારે એક્ટ આ છે, હવે શું હતું અને કેટલું એ કેરી થશે, સેમ અન્ડરસ્ટેન્ડિંગ વી ડોન્ટ નો. Yeah. Now another very interesting, and again I am sure this could irritate our audience, one more time is, in the earlier act, the language they had used is in 92A2, which is the objectifying subsection for the definition of the associated enterprise. In that they had mentioned 2 enterprises shall be deemed to be associated enterprise if there are following conditions, if they are met. So suppose if I have a subsidiary and I am holding more than 26% in that, then that subsidiary is my associated enterprise. And since the language was that 2 enterprise shall be deemed to be associated enterprise, that meant that for my subsidiary's perspective also I am an enterprise, an associated enterprise. Okay, we are good so far. If I am looking from my perspective, if another entity is my associated enterprise, from that entity's perspective also I am an associate enterprise, and that was an easy reading because it was mentioned that 2 enterprises shall be deemed to be associated enterprise. Now what has happened in the newer act is associated enterprise in relation to another enterprise means an enterprise, and then it has its that entire list. A lot of people are reading it as if this is unidirectional now. That if I am holding 26% in you, you are my associated enterprise. But if I'll look from your perspective, I may not fall within the definition of associated enterprise. But this is extremely silly. This is like saying કે હું તારો ભાઈ છું પણ તારા તરફથી કોઈ રિલેશનશિપ નથી બની ગયું. not that everybody is, taking this as a valid stand, or maybe, really reading it in this fashion. But if you read in a very plain vanilla fashion, the current message they are trying to pass is this. Any doubts around this one? At least this is clear what I'm trying to say? Or do we have any, we need further clarity on this? Balcony, please. So we, discussed these three fundamental shifts. I have just, again summarized them for your easy understanding. It's always good to have a lot of unresolved questions, so that at least we consultants would be relevant. But then there are certain other points earlier, like at any time during the year that we discussed, it appears only in clause A2 and A3. This we have already discussed. For the banks, now earlier it was pretty clear that since both these subsections A1 and A2 had to be read together, and if I have a heavy borrowing from any of the banks, since they do not participate in my capital management and control, I could always confidently say that we are not associated in any ways. But in the current scheme of things, since that order has been reshuffled and that is no more a prerequisite, the high chances that bank could be claimed to be my associated enterprise. I mean, it will fall within the definition. Whether I would want to report it or not is obviously my choice. Now the interesting thing, or the savior in this case, is that although our local law, if we agree and believe, has changed, but thankfully there is no change in the definition that is there in DTAAs. And DTAAs still continue with this requirement of having participation in capital management and control. So this could be a savior in a lot of cases wherein we would want to claim that that treaty definitions are, or provisions are, more beneficial to me. I would want to resort to them. Yes? Where we don't have DTAAs, we might not be able to. Yeah. Unfortunately, DTAAs, we don't interpret it. We don't generalize them. Those are like specific agreements, and we stick to whatever is, in that specific agreement. Yes. Absolutely. Absolutely. Yeah. So we need a lot of clarifications from CBDT. The sooner it comes, the better it is. We discussed most of it. I've tried to given some examples, which could be the categories wherein it could be a franchisee or a proper loan or a captive supply, manufacturer or guarantee beneficiaries. Another problem happens, on account of such changes is will now be completely misaligned with RPT definitions in other acts that we have in India, AS24, or we talk about Companies Act or GST. For your income tax purposes, a few of the entities might qualify as associated enterprise, but that may not be the case for the other statutes. I've just tried to give a quick action plan for companies as well as consultants. Companies, they should start mapping all the relationships against all 12 clauses, re-examine previous safe arrangements, especially around franchises and licensing and royalty, because they may now be, they may now qualify as your associated enterprise. Review your loan and guarantee structures. Address any of the temporary ambiguities, or keep a check of whatever relationships or new entities are there, and then maintain dual compliance maps. You'll have to keep in mind that you read the definition of Income Tax Act separately from all other acts, and don't be under an impression that more or less the definitions have to be same in different statutes. For consultants, not an A opinions, we end up giving a lot of opinions whether the two enterprises are A's or not. You'll have to revisit them. Assist your clients in evaluating implications. Update your Form 48 filing protocols. Form 48 is a corresponding form for Form number 3 CEB. Evaluate DTAA benefits, we just discussed that, and keep a check, or keep a regular, keep on monitoring your CBDT circulars and notifications. So the discussion that we started with is, it's not just renumbering or not just a new package. Things have changed substantially. We will have to take it seriously unless and until we get clarifications around it, because non-reporting, the penalties are stringent. It's 2% of your transaction value, and if your transactions are like sizable, then those penalties can be very stringent. The net is simultaneously narrower and broader. We saw that the general clause has been there now, which makes it very broad, but then we also saw that one of the general clause, which is that bilateral arrangement, is not carried in this new section. Yeah. That's it as far as A's is concerned. I'm still open, if we have questions, queries. No? Okay. The next one we can discuss is Form 48. This is again extremely important, and I'll tell you something very interesting. If we are not part of any of the big fours, the good news is that most of the big four, all four of them rather, they do not really take Form 3 CEB related engagements anymore for whatever internal reasons they have. So this could be really a fantastic opportunity for non-big four firms, because the earlier form 3CB was pretty convenient and very easy to deal with. You put your AE's name, you put the transaction's name, randomly select any of the methods. TNMM was the favorite choice amongst most of the consultants without even evaluating whether that is applicable or not. But then the good part was, whatever we had written and whatever we had mentioned was considered a good compliance, and we always had an opportunity of explaining ourselves better in the transfer pricing study report. And most of the times while dealing with officers also, you'll usually say that, once we start discussing the TP study report, nobody really went back to the form 3CB to, validate whether same story has been captured in the transfer pricing study report. So that is how we were safeguarded. But now onwards, things have really, the details that are required in your newer form, it is as good as your transfer pricing study report, just that you are not preparing a document, you are just putting details in the form, but it's as good as your TP study report. So now we really wouldn't have that luxury કે ગમે એમ કરીને compliance પતાવી દો પછી assessment time will see to it. For corporates, all the decisions that you need to take around your benchmarking, be it your, the decision whether you would want to adopt aggregation approach for benchmarking multiple transactions together, or the selection of method, or your selection of comparables, number of comparables at least, all that you, it's no more that you do it later when required. You will have to do it at the point of time when you'll be complying for your Form 48. So this could be a fantastic opportunity for, firms like ours, or any of the non-Big Four firms, for us to take this discussion to our clients and start getting engaged with them for this form. Okay. So the old form, it was pretty convenient, as I just mentioned, and this summarizes, what all are we trying to discuss in these slides. Form 3CB was a simple certificate, not an analytical tool. We easily got away with just reporting our transactions without really worrying about the benchmarking, but that's not going to be the case anymore. Once this Income Tax Act 2025 got enacted, then we had draft rules somewhere in February 26, and then final rules got notified in 20th March, and this will be effective from 1st of April 2026. So for 25-26, you'll still continue filing your Form 3CB, but then for financial year 26-27 is where this would be the first case you'll be filing Form 48. I just tried to, broadly make you understand what has really changed. The reporting structure has undergone a significant change. Earlier, we just used to report transactions basis their nature and with, matching it with the clauses that were provided in Form 3CB. Now onwards, it's going to be a transaction type based with drop down selection. So transactions are also, now defined in that scheme, and you'll have to go and select from the drop downs. Earlier we had this liberty and luxury of mentioning the transaction the way we wanted to, and believe me, I've seen cases wherein the descriptions were so confusing, it was really not possible to understand what this transaction really means. But gone are those days. Now you'll have to be very specific, and you'll be selecting it from the drop downs. The data format, earlier it was narrative and text driven. It is now going to be all machine readable and structured digital form. ALP computation, earlier we just used to mention the method's name, and if my transaction value is 100, it was pretty, easy for me to mention the arm's length price is also 100. Not sure whether I had done my arm's length analysis or not, but we used to confidently do that. Now that is, that will not be the case anymore. Full ALP computation is what you are supposed to provide in this new form now. Transaction identifiers, earlier there were no identifiers, there was no mechanism or any tool in place to, really keep a track of transactions. But in the new form, it's all, it's going to be extremely clear, and those cross referencings would be much more easier for department because it's all codified now. You'll be having IDs for everything, for your related parties, associated enterprises, or the listing of transaction. At each and every place you'll be putting IDs there. Benchmarking we discussed in TP report earlier. Now you'll have to mention the number of comparables that have been selected. What is your range? It did not, end there. You'll also have to disclose if you are doing any adjustments. Earlier we used to see a lot of transfer pricing study reports wherein this was, a very common paragraph that we reserve right to claim any adjustments. But now onwards we'll not have that kind of luxuries. If we want to claim any adjustment in the transfer pricing analysis, your adjustments will form part of this new form. APA linkages, earlier it was not required. Now onwards you will be categorically mention whether there is any APA in place along with the date and acknowledgement. For consultants, certification language earlier was V certify, now it would be I certify, and this seems to be a step to ensure that we take accountabilities of things of what we are doing. Benchmarking that was once a defense kept in reserve is now a disclosure made up front. Your new form will somewhat look like this. It has 6 sections or 6 clauses or 6 parts we say, and 11 clauses in that. Part A is very simple, your SSA's particulars. Part B will be aggregate amounts of the transactions. This will be auto-populated. Part C is wherein you list down A's with their IDs. Your deemed transactions, deemed international transactions, a lot of focus on that. Earlier we were always supposed to report it, but the newer form has very specific focus on deemed international transactions. And you'll transaction also, you'll transaction wise details you'll provide in this section. Part D will cover your specified domestic transactions. Again, in this also you'll be giving IDs to your A's as well as your SDT transactions. ALP determination, right? In this form itself, if you are taking aggregation approach, you will have to report which all transactions you are aggregating, your most appropriate method, your comparable analysis, your statistical measures, and full ALP computation template is there. You will have to provide each and every detail here. And then part F is documentation certification. Obviously, since you as a chartered accountant would be filing this form, in a way you are required to certify whether the TP documentation, which is you are required to maintain it contemporaneously, are you managing it or maintaining it or not? So for the first time, I mean, if this itself looks that there is going to be a lot of codification and a lot of distinguished reporting, I'm sure once we'll have this kind of report in front of us, it will, for us also, the exercise would be much easier to keep a track of transactions, especially in cases where there are multiple transactions. Now onwards, it's going to be extremely structured. It's believed, by having this kind of codifications and IDs in place, maybe department is going to, have a cross-year traceability. They might or they would want to, and they definitely will use AIs or, whatever tools available with them for doing analysis on transactions, some preliminary analysis of how you have been reporting transactions in past years and what has been, whether your story has been consistent, with what you have been always claiming, especially around characterization of entities and selection of methods and profitability indicators. The details that they are asking is to this extent that if there is one comparable price for your benchmarking analysis, you provide that. If there is another band wherein if there are 2 to 5 comparables, you'll give an arithmetic mean of it. And if there are 6 or more comparables, you'll give your range. This was always a requirement. It's just that, the benchmarking approach has been same, nothing has changed as far as the benchmarking approach is concerned, but then you'll be reporting this in the form itself. And then method specific computation templates are provided, wherein if it's a cup method, it will give you a very structured flow of details that you are supposed to provide. There is hardly any scope of making any generic statement left to us. It's all going to be a very objective form with very crystal clear information. Unfortunately, in the current form, the flow of information is such that if you are making adjustment, any economic adjustment on the comparables, there is space to fill in that information. But if I am making any adjustment on the tested party data, which in a lot of rulings have been accepted by our judiciary, but then the form does not give me or that leeway of providing any economic adjustment to the tested party. And maybe that could be another way of department saying that we are not going to accept adjustment on the data of tested party. We will allow you adjustment only on your comparable data. Again, this forms requires if your AE has been incurring certain cost for you. So far this kind of information was never called for in 3CB, but now onwards you will be required to provide if there are any ESOPs or employee benefits. If your AE has been providing you any assets or software for doing your business in India, for which it is not charging anything, your travel expenses that are incurred by your AEs, any training or consultancy provided by AE, secondment transfers, all the costs that are incurred around those employees, outsourcing cost, even forex income if you are generating anything, and the subsidiaries and grants if there are any. You will be providing all this information well within the form itself. This broadly covers all the free of cost items which usually you miss out reporting on in your 3CBs because there has been no charge and you really fail to validate whether there has been any transaction or not. But now onwards, you'll not have those kind of liberties. You'll have to reach out to your associated enterprise, ask their team to provide you this information so that you can timely file your form in India. Again, this is a very crisp comparison of the two forms, the earlier one and the newer one. I mentioned the act and rules that are relevant for this. We discussed that earlier it was a clause-wise arrangement and now we need a transaction on type-based narrations. The certification we discussed, identification we discussed, transaction tracking we discussed. Earlier it was a very sequential listing only. Now onwards you will be giving unique IDs to all those transactions. Benchmarking disclosures we discussed, APA disclosure we discussed, Note 14 expense disclosures, the entire list wherein we discussed that those free of cost items. TP study confirmation you will be required to provide. We were never asked, required to provide this earlier. In the newer list, the drop down that we now have in the new form, we do not have these transactions issue or buyback of shares. Earlier there was a separate clause. It is no more there. In most of the cases, the taxpayers have been taking this stance, relying on Vodafone ruling that this kind of transactions are not supposed to be anyways reported. I guess it seems to be, clarifying in a way that we need not be reporting such transactions anymore. Observation column earlier we had in the earlier form, it has been removed from form 48. No general descriptions or no attempt of drafting languages which could convey whatever we wanted. We do not have any such liberties now. The form is going to be extremely objective. This is new, the PAN of the firm, the CA firm that is filing the form is also being asked. Earlier forms we used to mention about nature of A's business. That is not required anymore in the new form. Defined transaction categories. Earlier it was very open. We used to mention descriptions of transactions as per our wish, but it's in the newer form, it's all defined. Even for SDTs, the transactions have been defined. So it certainly increases your compliance burden and the professional risk if you are issuing this form. I've just tried to put, what is important for the taxpayers or corporates. If they are, anyways following ERPs or having tools to record their transactions, maybe they can, think of making necessary modifications to all those systems to ensure easy flow of transaction from your systems to your form. A lot of organizations have been doing this. Note 14 data collection, this is extremely important. If you'll start asking in most of the cases wherein cross-border transactions, we usually see, it's a task, it's almost impossible to get details from your AE's teams, but then you'll have to do that and you'll have to start this exercise well in advance. You cannot be missing out on this. The documentation before filing, you'll have to have your TP study in place before filing. Cross-filing alignment, just make sure, whatever you are filing here and whatever you are filing with other jurisdictions, as well as, under other laws, so that there is a serious check on whatever is being reported here. Parallel compliance, it will time and again so happen for you that for compliance perspective, you are reading Income Tax Act 2025, but for your previous year, wherever proceedings are going, time and again you'll have to go back to the earlier act. For chartered accountants, this is really an attempt to take more accountability. We are also supposed to verify that the TP documentation is well maintained. Engagement letters, you'll have to make a lot of changes. Data deadline shift, start asking for data from your client. Earlier, a smaller window of 5-10 days usually was sufficient to file the Form 3CEB. But now onwards, you'll need sufficient time. Just start discussing with your clients, that we need to start this exercise well in advance. And elevated scrutiny areas, there, high chances there be a lot of inquiries from authorities going forward. There are plenty gaps, but the most important ones are this. In the form, although you are supposed to be mentioning about the entire arm's length price determination, but one of the most important step, which is selection of tested party, you do not have any column to mention your tested party. And the other problem is, if you're selecting foreign entity as tested party, in those cases, the information would be in currency other than INR, but then your form does not allow you to fill information in any other currency. So that is another challenge, you need to keep in mind while filing this form. Tested party adjustments we discussed. The form currently gives you liberty of making adjustment only to the comparable data. You do not get, option to describe if you are making any adjustment to the tested parties data. Safe harbor treatment. So for APA, the form has a very specific section wherein you can mention if there is an APA and what all transactions are being covered, but you do not have any similar disclosure for transactions that are covered under safe harbor. Benchmarking threshold below 1 crore INR. Now this is a very tricky situation. TP documentation you were earlier supposed to maintain only once your transaction crossed the threshold of INR 1 CR. But now onwards, since you will be required to provide your entire benchmarking analysis in the form itself, so in a way it's making it compulsory that you have your TP documentation in place for cases wherein the threshold is not crossed. So, what most of us are feeling is few things will happen. It's not just a certification anymore. You're giving your complete analysis here. This is extremely important. Every judgment call is now an auditable position. Whatever you want to do with your transfer pricing, you'll have to do it now. You'll not have luxury of time wherein you can think of justifying your arm's length prices later on once you receive the notice. All your decisions, all your benchmarking approaches, aggregation approaches, methods, this, that, whatever you wish to do, there will be plenty cases wherein you may want to apply CUP and TNMM method simultaneously. There would be transactions wherein you may be required to justify your prices as well as your profitabilities. Now, earlier we had this luxury, that will take this decision later on in consultation with AE and, ensuring consistency in what they are doing in their jurisdiction vis-a-vis what we do here in India now. But those kind of luxuries we won't be having anymore. You will be taking all your decisions right now. Any questions around Form 48? For consultants, I can say this is going to be a fantastic opportunity. Just go and seize it in the market, because uh, I'm sure you'll find plenty of opportunities. Great. The another important thing I wish to quickly discuss it. We have this session till what time? 10:30. That's it. Let me quickly show this one. Safe harbors. Have you heard of safe harbors? Anybody who hasn't heard of safe harbor? Very simply put, if I am, in normal case, if I am doing a transaction and I have my way of determining arm's length price, the TPO can have his own way of determining arm's length price, and if two of us are at a juncture where we are left with conflicts, I would wish there could be certain mechanism which could be a guideline for me, that if I do my, conduct my affairs in certain fashion, then transfer pricing officer will be happily accepting it. This is what is a safe, one of the mechanism that we have is safe harbor, wherein for certain transactions which are common in nature and they are pretty simpler transactions, there is a list of certain selected transactions which CBDT has, agreed upon, that if you are conducting your transaction in this fashion and at this price, and if you opt for the safe harbor scheme, we will happily accept your pricing, provided you are an eligible taxpayer for the scheme. Now, safe harbors have rarely seen any success in India earlier, because the rates that were prescribed for those limited transactions also were pretty high. So we had seen very limited application of safe harbor, but the current amendment that has come in, which is specifically for IT companies and again those captive units who have seen adjustments year on year, because for any captive unit, the usual margin any group would want to keep in India is say 15 to 18%, but then, and that also on the higher end, the transfer pricing officers have been claiming no, instead of 15 to 18, they should be earning anywhere, between 22 to 25%, and for this difference of 25% to 15%, they have been year on year making adjustments. Thankfully, we now have an amended safe harbor in place, which says if you are a captive unit and your transaction or your annual revenue is below certain threshold, which again is a brilliant threshold. Earlier it was 300 crores, so very few companies were really eligible for safe harbor, but now it's 2000 crores. So that threshold has been substantially increased. A lot of captive units will now be eligible for the newer safe harbor, and the safe harbor rate has been agreed, or it's been now declared at 15.5%. And for IT business, it seems like that most of the captive units would want to adopt this 15.5% safe harbor, although they might feel it 1 or 2% higher. But if by paying 15.5%, if you are earning peace of mind, nothing like it. And the good part is it is, yes. 11:30 સુધી છે? No, we એવું છે? એવું નથી? Super, great. So, So this is actually going to be a game changer, especially when you go to south of India. You'll see a lot of companies in Bangalore who have been facing this transfer pricing adjustment year on year, and a lot of firms are thriving in that region only because of this one issue around acceptance of margin for IT captive unit. God knows what will happen to those firms. Tough time for them, because if there is no litigation, just simply filing a safe harbor application is not going to be that lucrative or that rewarding. But for from overall industry perspective, a very welcome move. We see a lot of takers for this safe harbor already. I've just tried to present, what safe harbor is and what all changes are there in this. This again will, could be a very convenient or easy referencer for you when you want to read about safe harbor or discuss safe harbor with anybody. So if we look at all the safe harbors that are there currently, enacted for IT services, which will now include software development, ITS, BPO, KPOs and contract R&D. For them, the safe harbor margin is 15.5%. The revenue is 2,000 and 5-year block. For contract R&D, we have 24% on operating expenses. All this have been as it is. There are no changes in it. It's just that for your easy understanding and easy referencing, I put them in one place so you can easily refer to them. The current ones, all the transactions that are currently for which you have safe harbor are here. You have safe harbor for contract R&D, for core auto components manufacturing, non-core auto components manufacturing, intra-group loans, in Indian denominated loans, loans in foreign currencies, corporate guarantees, low value adding services, and again the new we have is data center services, wherein 15% on cost is the suggested safe harbor. Interesting thing for IT safe harbor is even the application has been made very automated. You make an application, it gets accepted or rejected. Unlike other transactions wherein you'll have to make an application to the AO, and then AO, if he feels, he will pass on your file to the TPO to check whether you are eligible for the safe harbor or not, and then they'll give their decision to you. But for IT, they have made it pretty convenient, all automated. You make your application online and you get your responses online. Earlier there used to be different forms for different safe harbors. It's now all unified. We just have one form, Form 49. Automated verification for IT we discussed, validity we discussed. Earlier every year we were being notified what would be the safe harbor rates. Now onwards they have made it clear, we'll give you a block period of 5 years for IT, and for rest of the transactions they'll give it for 3 years. Again, this is very important. Opting for safe harbor still does not mean that you are done away with the requirement of filing Form 48 or maintaining your local file. You still have to do that. So you need not be under an impression if I am filing for safe harbor, I am then not required to do other compliances. This again is a comparison of, the new act and the old act. For your easy reference, I have just provided all the details here. We discussed safe harbor also, and now block assessment, really important. I had mentioned earlier that block assessment is a terminology which means something else. Just for an easy understanding and common referencing, we are using this terminology. So far what we have always seen is that each year is being assessed, and this keeps on happening year on year. Somewhere a need was felt that for transactions which are recurring in nature and there are similar issues, why can't there be a mechanism wherein a block assessment can happen, which can at least cover 2 to 3 years simultaneously, so that you don't keep on making recurring submissions on recurring issue time and again, wasting your resources and energy. So that has been that preposition has been accepted. For now onwards, you'll get an opportunity, and this is again an option, it's not mandatory. If as a taxpayer you feel that I would want this block assessment option to be taken in my case, that's an individual taxpayer's choice. This is not a mandatory thing. There have been cases where the TPOs have been readily accepting your arm's length price. Now in that case, you would want to take an option and ask the TPO to have a look at subsequent 2 years also. So all your 3 years are assessed at one time with the same mindset. That can really be an advantage. Even in cases where that TPO is going to make adjustment, in such cases also we have seen that taxpayer are happy that we know adjustment is going to be anyways there. Why at least let's be given relief from this recurring cycle of visiting the TPO's office and making the same submissions time and again. So in such cases also we have seen that taxpayer have been happy with this, that it's less to do with the relief on adjustment, but then at least corporates can save on their resources and time and energy and things. Now, which all transactions or who could be eligible for this? So there has to be similar transaction importantly, or SDT. ALP methodology should remain unchanged for all the 3 years that you want to opt block assessment for. Your FAR analysis, your business model, your accounting and tax treatment remain materially unchanged. Your contractual terms, your responsibilities and benefits with entities remain unchanged. If your characterization is changing or your benchmarking approach is changing, you may not be able to opt for this. Your change in business results, holding structure or AE ownership is permissible. So if there is a change in holding structure, but then that really does not have any impact on your arm's length price determination, you can still opt for block assessment. There are exclusion for cases covered in your special or block block assessments. For those years you cannot opt for this, or you have transactions with A's which are in notified jurisdictional areas. Those transactions you may not be able to cover under block assessment. Do we have any questions on this? The process step by step would be like this. Suppose in case if the AO has referred to your case to the TPO, in that case you may decide and file this form 46. You also ask your CA to certify your claim in form 47. The TPO will go through the details and decide whether they will want to grant this opportunity of block assessment to you or not. They'll give you a validity order for this, and in case if this is not in your favor, you can always go and object against it. The form 46 is filled by assessee, wherein they just fill that they are exercising this option for block assessment. You give details around initial tax years and subsequent years, ITRs and form 48 filing days, transaction particulars. Compliance commitment has to be there. Suppose your third year, if it so happens that your third year is still open, it's ongoing, and your compliance due dates have not fallen within that, when you are making your application, you'll have to give a commitment that we will duly comply with our ITR requirement and form 48 requirement. Form 47 that will be filed by a chartered accountant. This is to certify the eligibility and compliance with this section. Verification of no material, factual, functional or contextual or economic deviation. We'll have to verify and certify that. And confirmation of timely compliance for year 1 and 2. And in case if your third year would be still open, you'll have to somewhere mention about it that we'll ask our taxpayer to do the timely filing. So along with this, there are a few changes which have happened in a few other sections, not specifically around block assessment, but I've tried and captured what minute changes have happened in other sections. One of them is around this RPM and PSM method. If you ask me, is this a substantial change? Frankly, no. But important to keep in mind while you are reading things for academic purposes. For secondary adjustments, earlier it was all LIBOR based. They have given now the alternate currency linked rates. For rule 84 and 85, your TP documentation, earlier you were supposed to maintain it for 8 years. Now onwards you will be required to maintain it for 9 years. Your form 48 filing date remains same. Key takeaways, your documentation must precede filing. See, this is extremely important. If your documentations and your filings are not in time, you will not be able to take advantage of this scheme. Multiple year TP certainty, 3 years, you get certainty. And that certainty could be anything. Either it could be no adjustment or adjustment, but still you have certainty around it. Your PSM policy you need to revisit because hardly you'll find PSM being applied, but in case if it is, you'll need to keep in mind what structural changes have happened in this method. This is very interesting. Email trails as evidence. Thankfully, in the documentation list, which are acceptable by the authorities as an evidence, they have now included email evidences as well. So, a simple, evidence that you have timely maintained your local file could be an email from your consultant to you before the form filing date, saying that, here is the transfer pricing, study report, prepared and maintained well in time. That's the simplest example of email evidence. Defined interest benchmarks, your LIBOR has shifted, and 9-year retention for your requirements, for your documents. We covered safe harbors 48. Another quick discussion I want to have is around APAs. Something has changed in this as well. I've summarized the sections around APAs and all the form filings that are required here for your easy references. There has been change in the fees. Now the fees is 20 lakhs flat. Earlier it was dependent on the quantum of transaction and the fees was 10 lakhs or 20 lakhs. but now it's single flat 20 lakhs irrespective of the quantum of transaction. You'll be filing form 51 for APA. Earlier there was a different form for filing rollbacks. Now you can file application for rollback in the same form. Form 3CEE, which was the form for withdrawing your APA, that form is no more there. You can simply write a letter saying that we are withdrawing our APA. Enhanced annual compliance report. Once you enter into an APA, year on year you have to file an annual compliance report wherein you simply put that you have followed the terms of agreements rightly. There have been certain changes in that form. They have made it more detailed. Form 54, this is brand new renewable form. Earlier when you wanted to renew your APA, you used to make same application as if you are filing a fresh APA application. But now onwards you have a simpler form which is just for the purpose of renewal. Now the biggest procedural gap is closed now. Earlier, there are no time limits given to CBDT for agreeing to APA. That used to result in cases wherein we have seen that APA is usually, it's always 5-year forward looking. We have seen cases where all 5 years have lapsed, but the APA is still not agreed. You will not find similar situation now onwards. For they have categorically mentioned that if an APA is not reached within 3 years, the application will be closed. This is an outer limit. What they have tried to do is unilateral APA, they have tried to give that 1 year should be enough. For IT services, which we seen in the case of Safe Harbour also, that IT service is in a sweet spot right now. For APAs in relation to IT, again, CBDT has ensured that we'll ask the CBDT to complete APAs within 2 years. For maximum time limit is 3 years. And AO's order after modified return. So once you agree to your APA and if there is any change in your taxable income, you are supposed to file modified returns. Those modified returns were never cleared by the AO. They used to be, as it is in the system forever. But now they have a very, strict timeline for that also. Within 1 year, they'll have to finish it. Fee refund is something we are seeing for the first time. Earlier, once you file your APA fees and nothing conclusive happens, you never used to get refund of your fees for APA. Now onwards, if, naturally, if it will be on account of department that you couldn't agree, you can have an option of claiming basically your fees. Rollback retros maximum period for 4 previous years you can agree upon, that remains same. Modified return we discussed. There could be circumstances wherein what is an APA which is void ab initio versus cancellation. These have now been defined category. This will also help you in ensuring your refund of your fees. I've tried to give a very quick and crisp comparison of Safe Harbour versus APA. That's in most of the discussions we get. I keep on getting query, how is a Safe Harbour different from an APA? I've just tried to put certain important parameters, how these are two different. Under a Safe Harbour, there are prescribed categories only. There is no other transaction that you can think of, applying for a Safe Harbour. But then under an APA, you can just select any transaction and decide as a taxpayer that I would want an APA for this. The process in Safe Harbour is unilateral, no negotiation. They have prescribed the rates already. Wherein in APA, you go and really negotiate with CBDT. So a question that usually we keep on receiving is, now once for IT services, if the Safe Harbour is as low as 15.5%, Do we see a possibility of an APA which is as a lower rate? My answer to all such questions is yes, high chances. I had a detailed discussion with current APA commissioner as well. While her initial response was that 15.5% is a markup which could be the most competitive markup, and it would not be very feasible or likely for them to agree on a lower number. But if we can present a case and if we can justify it, they would be ready to look at such cases, and if we are lucky enough, they might agree on a lower rate for IT services also. MAP proceedings, if once you apply or once you opt for safe harbor, then you cannot, you do not have option of MAP available to you then. But if it's an APA, your MAP gates are still open. Safe harbor, they are not costly other than your consultant fees. But then APAs, there is a flat fee of 20 lakhs. Rollbacks, this is not available in safe harbor. For APAs, you can roll back your APA for preceding 4 years. So in total, you can get certainty for 9 years. Certainty period in this case is 3 to 5 years. This APA we discussed, if it is forward looking, then it is 5 years. If you opt for rollback also, then in total it could be 9 years. Flexibility, this is prescribed margin, so no flexibility at all. In this, you can take any method, any explanation, and just go and negotiate with the authorities. Yeah, so maybe that's pretty much from my side. I'll be happy to take questions if any. Yes, please. You're talking about CBCR reporting?
Yes, sir.
Yes. So what about that? Sorry,
सर वो compliance कैसे होता है और क्या होता है? I'm sorry, I'm not much.
I'll quickly try and explain what this 3-tier documentation is all about. With a very simple example, suppose I am a group. I am present in India, Dubai, US, UK. Right? Now, for transfer pricing auditors, so say tax department who are auditing your transactions really, the challenge across the world has been that they usually have access to information which is relevant or has anything to do with their own jurisdiction. For an example, in the TP documentation that I maintain, I will report transactions that I have done with my AIs. The transaction between my AIs in their own jurisdiction, I am not supposed to report in my local file. So in cases where the group has really structured their transactions where a lot of value is being moving from one jurisdiction to another, all the jurisdiction authorities are usually handicapped because they don't get to see the entire picture. Okay, and no local regulations can make it compulsory or mandatory for me to report any information which has nothing to do with this entity in your home jurisdiction. I mean, tomorrow if a TPO comes and asks me what is the transaction between your Dubai entity and UK or US entity, I'll straight away say I'm not supposed to respond to this, right? Because that's out of your jurisdiction or your purview. So everybody had realized that the authorities are handicapped, and if there is a little more or little additional information available to them, they'll be in a better position to analyze or assess the transfer pricing policy of the group. And that is where this concept of master file and CBCR also came into, even in our regulations, this was, an outcome of the BEPS project that had, there were those action plans and all that were, someday we had seen them. If you ask what a master file is, it's just a blueprint of the entire group. And then there are few parameters, important ones. So for any business, what are important, components of a business? It will primarily be your intangible, your funding, your intra-group transactions or services. So you just give a description of the group's transfer pricing policy. You really don't provide any numbers into it. No quantitative information in that. So as good as a blueprint of the entire group. So local file plus this blueprint gives the tax officer a better clarity whether the characterization which they are claiming in their local file, is it consistent with the group policy or not, or is the group trying to give different stories in different jurisdiction? Because master file is going to be one common file. It is not going to be separate for separate jurisdictions. So if, just an example, if I am claiming that I am a captive unit in India in my local file, that should also reflect in my master file. It cannot be that I am completely singing a different song there. You get my point? In addition to that, we have CBCR. Now CBCR has numbers in it, and it's very objective. That if you are claiming that most of my profits, I'm just a very simple example. If I'm claiming that most of my profits are parked in certain jurisdiction, the information that is captured in that form has like number of employees that are present in that country, what level of activities are there. So you'll find a direct linkage about the value addition that is actually happening in that country, which is contributed by your employees or the revenue that you are generating, and you compare it with the actual profit allocation in that country. If you have value generating parameters in that jurisdiction, only and only then you will have profit allocation to that jurisdiction, right? If they are not hand in hand, then definitely there is something wrong in your transfer pricing policy. So yeah, so these are broadly the reason we have this 3 documentation in place. Obviously CBCR is a extremely detailed form and too much information about the group. So they have kept thresholds as high as 6,400 crores for, as at consolidated level. Master file is a simpler form, it's just a blueprint, so there the thresholds are really low, like 500 CR. If you ask me why this threshold, frankly nobody has an answer to it. Nobody has it. But then thankfully globally they are on similar lines. So yes, please. You simply need to ask consolidation कहाँ पे हो रहा है, the final consolidation. A very simple question. And what is your consolidated revenue? I know where you are coming from, where you want to take, analyze whether these forms are applicable to your client or not. You ask them straight questions. What is your consolidated revenue? But you start doing it well in advance. If you'll start doing it like 10 days before your deadline, most of the groups, international groups, you'll not find responses, especially if they are Europe based. It will take days and days for you to get responses from them, because they are running short on teams, they are running short on everything, fund this, that. So it's extremely difficult. I usually suggest the moment your financial year ends, you start asking these questions and keep on following up on those emails. So at least someday you will have responses available with you. See, if I'm technically sound, that's one thing. But if I don't understand the practical challenges of my client, that's not going to help anybody.
Sir, suppose if there is a UK company, one-man company.
One-man company.
His employer, owner, stays in India.
The owner stays in India.
And he does not, charge anything by way of salary also. Whether it will be governed by TP provisions.
Only for this transaction? But what's the transaction in place?
He's rendering services to the company by sitting here only, but does not charge salaries to the company.
See, that will depend. If he's in India and if he would have charged salary, then he would have been paying taxes in India, right? If he's a resident in India. So,
if he does not charge salaries to the UK company, then India will not get any tax on this notional income of salaries. See, as I understand, under transfer pricing provisions, if I have rendered services, if I don't charge, will it be out of the net of TP?
No.
So in that case, how will one decide the quantum of salary also?
That's a very tricky question. So salaries, even if you look at what had happened in specified domestic transactions, someday when Section 40A was also part of the definition of SDT, all the KMP remunerations were very much covered and people were supposed to justify KMP remunerations. Till date, nobody has an answer to it. Nobody. But then there are industry benchmarks that you use. That's the safest, or maybe you reach out to any of the hiring agencies and you check with them that for this qualification and this services, what should be the right remuneration. We find out ways of this.
I will give one step further. If I am not charging salaries in this case, will I still be governed by reporting requirements?
See, transaction is there. What you are supposed to report is a transaction. Whether you have paid for it or not paid for it, it's a discretion you have exercised. But the transaction has to be reported.
Sir, one more thing. In this company's case only, company has been earning huge profits.
Brilliant.
But does not declare any dividend. Again, non-declaration of dividend will be hit by TP.
No, dividend is it's not a bilateral transaction, it's a company's choice. They are not supposed to be declaring dividends, so that should not. Dividend anyways, we keep it out of purview of TP because one, irrespective of the relationship, suppose if there is a 51% holding and 49% is some other party, dividend cannot be discretionary. It has to be consistent. So, and it's always considered a one-way transaction. We usually don't report dividends. But then for your client, there are many other challenges, like there will be poem and then there will be other gamut of problems for this kind of arrangement where he's running a company sitting in India, which is in UK. There are many other challenges.
Thank you, sir.
I'm sorry, just any other question if...
As we come to the conclusion of the today's session, we gratitude to our esteemed speaker, CA Vyom Sharma sir, to taking an informative and insightful session on transfer pricing and safe havens. Also, conclusion of the 11 days of the income tax series. I also thanks to all participants for their active presence, participation and support throughout the series. Also thank to Jiten Trivedi sir and Rinkesh sir for conducting this 12 days income tax series and providing us the platform of learning. Thanks.
Thank you, Vishwa. Just a small announcement. Already previously we have made the announcement. The trust session will be on the 2nd of July. So evening the commissioner will be here for the exemptions matter. And I request all of you do not register separately. That registration is for the separate, if somebody wants to join additionally. So all of you are invited on the 2nd July. And again, thankful for joining for this 12-day series. Thank you. Thanks a lot.